Good day, fellow investors! It is that time of the year and the first S&P 500 forecasts for 2024 are out. And all of those are the same. The S&P 500 will go up 11% to 5,100 points from the current level of 4,500 points, 10%, 11% up in line with historical numbers. And I just want to discuss these analyst estimates from big investment banks and give you a different view that will be extremely valuable, but that is something you need to know. The incentive of these projections and what's behind these projections and how are those made to catch you. Because if we look at earnings projections that then are the base of the S&P 500 level projections, the projections from earnings go from 230 to 250. Those banks that need more money and more investors are more exuberant. Those that are okay or do something else are a little bit less exuberant, but still exuberant. And if we look at average earnings, they project a P ratio of 21 for 5,000 points for the S&P 500. Now my question is, how the heck will earnings be 250 points in 2024 when those earnings now are just 182? This means that earnings are going to grow 37% to 250 points in just 1 year. While over the last 15 years, earnings have grown from 124 to 180, which is a little bit more than 2% per year. 2% per year. But now, with a recession in Germany, with Europe doing bad, with the whole world slowing down, I was looking at shipping stocks for my research platform, and it's a disaster. S&P 500 earnings will grow 37%, which is 15 times the average. Whoa! And if we just look at past projections, past earnings projections, this is incredible. This is a video I made 9 July 2022, where we analyzed the guide to markets from JPM for 2022 half year. And then the projections for 2023 were that earnings will be 250 S&P 500 points. What is the reality? 250, no, but the reality is for 2022 is 179.15. Now will be 182 for 2023, but the projections were much higher. So my question is, where will this miracle earnings come from? But then we need to invert this and look at why are analysts making these crazy projections when they even know, or they are drinking their own Kool-Aid that they think they'll be right. There is this great book on Wall Street, Where Are the Customers' Yachts? And when it comes to analysts, investment banks, you always need to understand they are there to go after your money because they make money on fees. That's their whole reason for existing. Your money and fees on that money. If they would say S&P 500 earnings will go down, S&P 500 likely level is 3,500 points, you would simply go, or most customers would go to another bank. So analyst projections, no matter the recession in earnings, no matter anything, will always be very rosy and exuberant, and then over the year they will adjust if necessary. And then just a quick note on the incentive of analysts. Projections are all the same to one another. Why is that? Because if you're an analyst from Deutsche and next year the index is at 3,000 points, you can simply say, well, everybody else said the same, so I wasn't that far off being wrong. However, if you have balls and you say the index will be 3,000 and then the next year it is not, you lose your job and you are not an analyst anymore there. So that's the incentive from the analyst's job perspective. But let me show you something very special here. An investment banker that charges 0.04 in fees, their projections are completely different. I went to Vanguard and I just looked at what are their projections for in growth of the S&P 500 and returns. Remember, the other banks had 10% plus because stocks give 10%. If we go to Vanguard, that doesn't need to trick you, return projections are around 5%, which is normal if we look at the earnings. P ratio 25, which leads to an earnings yield of 4%, plus 1 or 2% from growth alongside recessions, and Vanguard is completely right, and they are not selling you bullshit. This is the reality, and as the late Charlie Munger, rest in peace, says, show me the incentive and I'll show you the outcome. So all these investment banks have an incentive to keep your money there, to keep you believing stocks will go up, returns will be made, because that is the base on the fees. So always ask yourself, what is the incentive? What is my incentive of doing these videos? We donate the YouTube money, which is not much, but it helps, and I try to give you value through investing education on YouTube, and then my incentive is that maybe some of you who will find value in the research that I do will check my research platform, and that's my incentive. So blatantly speaking, you can check my research platform. If it's not for you and it's not for everyone, keep enjoying the educational videos and analysis that we do on YouTube. I think that 225,000 subscribers means that there is also a lot of value that I give on these videos. Thanks, and I'll see you in the next one.